Okay folks, so we've got a lot to talk about, and in today's video I want to give you the latest exciting and violent updates on some of our biggest plays. And then the main focus of this video is going to be breaking down Pltr, and why there is an upcoming catalyst for Pltr that is likely going to wake it up. And in return for all of this, the only thing I ask of you is that you hit that ravishing like button, and also don't forget to subscribe. I'm also very excited to announce that this is going to be the first video in front of a live audience. This little bastard crawled in to watch the show. Even he wants to know if Pltr has a chance of waking up. But anyways, of course I have to wait until my girlfriend gets home so that she can squash him for me. So I guess we'll just keep him around for now. Okay, so I want to start with a catalyst play from the briefing this morning, ticker symbol VERY. It was a very good play. Briefed on it about 30 minutes prior to market open because they had a huge pop in the pre-market as funds and probably retail as well ganged up on this heavily shorted and also low float stock. And what happens when you add more volume into this kerfluffle at open? Well, you have a good chance for another huge rally. And that is what happened. This was actually quite an exciting play. It went from the high 13s and then just exploded, going as high as 22 bucks. The market hasn't been handing us a lot of catalyst plays this week, so it was nice to see this. But in and out, folks, these are not plays that you just buy and hold and forget about. Shout out if you caught this, but make sure you're taking profits. Mara, lovely Mara, went back to performing today as Bitcoin held strong. I was watching a Cathie Wood interview the other day, and she was talking about how the market cap of Bitcoin is now $1 trillion, and pointing out that that means it's worth about half as much as Apple, with the implication being that people need to start taking Bitcoin a lot more seriously. You think about Tesla, a lot of people didn't take Tesla seriously until it got to a market cap that no one could ignore anymore. And obviously Bitcoin isn't a stock and it's a bit of a different concept, but still there's insane strength in numbers. People like buying things that other people are buying. And I think that the next Bitcoin crash, whenever that may be, is going to have a ton of buying resiliency. But I want to put this in perspective really fast. If you look at US stocks by market cap, Bitcoin at $1 trillion valuation would be between Google and Facebook. So don't discount Bitcoin, folks, and certainly don't discount plays that actually produce Bitcoin like Mara and Riot. In fact, Riot actually just announced they bought Weinstein, which is North America's largest Bitcoin hosting facility. My criticism of Riot in the past is they've been a little bit more shy than Mara in terms of betting on themselves. They hadn't been making as many bold moves as Mara had. But this, of course, is a drastic step up for Riot. Definitely helps cement it as one of the leaders. I like both Mara and Riot. Yes, Riot's underperformed Mara, but in my opinion, these are sort of neck and neck players. The one problem with Mara, she likes to go up a lot, but then they like to do little share offerings that screw everybody over short term. So something to keep in mind, and that's one of the reasons that diversification is so important. Blink did very well today. This was one of our frequent add money to plays for the last couple of weeks, and I'd say start thinking about locking in profits on this play, especially if you got in the low 30s or even below 30. Lock in some of the profits. Don't get too greedy. These are going to have different rotations. Okay, next, skills. So our skills play has not been performing. We've talked a decent amount about this play as it found some bottoming action in the 17s, but today it really tested that and it broke through it again. I set a price target of $30 on this play at the end of March, and we did a whole breakdown video, which I'll link to below, but it's been really moving in the wrong direction. It must have a bad driver or someone that has the GPS all mixed up, because it's supposed to be going up, but it just keeps going down, so somebody needs to get in there and fix the damn GPS. But jokes aside, the lack of performance thus far, I think has something to do with the deleveraging of hedge funds. Q3 and Q4 of 2020, Insider Monkey reported a massive jump in hedge funds with positions in skills. Right now we're in a period where a lot of hedge funds are de-risking, they're getting rid of their margin, and so with hedge funds being overly centered in the stock, you may be seeing some of that selling pressure. But I mean, at the same time, at these prices, it's pretty damn de-risked. I wouldn't sleep too much on this play. Cheaper this goes down, the more upside we have to 30, and honestly, I don't see much of an intrinsic reason why this is going down, other than the fact that there's a lot of hedge funds concentrated in it, and other than the fact that perhaps a lot of the other gaming stocks didn't perform too well this week. So I'd say yes, this is an opportunity. So our Vuzi play did another 7% today, but remember folks, there's nothing better than locking in profits during the uptrend. We've been hammering that you want to make sure that you're locking in your profits on Vuzi, especially if you got in at a very cheap entry price and you've already got a 50, 60, 70% return. This is going to have a rotation where it starts going down again. That's when you want to rebuy it. But at this point, we can lock in the profits. Even if it goes up a couple more dollars, I'd feel better if you're locking in profits. Use that capital to fight some other battles where it makes more sense. And then you can go back into it when it gets back down to a fair deal. Okay, last recap and the requested ticker of the day, Clove. Look at this beast, folks. Finally up over 20% today. Finally getting some vindication in Clove. I think you'd agree, this has been one of the raunchiest plays. If you weren't following us, this was a high conviction stock that I finally started liking after it got hit with a bad short seller report, but then it got hit with the overall huge tech crunch, and then a ton of BS lawsuits and investigations, and that basically scared people away for months. But we held consistent our price target, and we kept this as a play. Talking about dips is a good time to buy in at a discount. And today we saw some very early vindication with more than a 20% rally at highs. This was as the government announced that Clover is going to be taking part in a program to lower costs for Medicare. But I mean, this doesn't really tell us that much that we didn't already know before. Clover is great at bringing healthcare costs down. I think that what this rally really shows is that a lot of people in the market right now are headline jockeys. Stock has a good catalyst, ooh, buy. Stock has a bad catalyst, oh no, sell. Ask questions later, but sell first. People who fall for drama are always late to the game. But of course, our community at ZipTrader, we weren't late to the game. In fact, throughout the downtrend, we said you're going to see Clove bounce after the drama subsides over the upcoming months, and despite some raunchy price action. We covered on March 4th how they had a positive catalyst with a big NIH grant, and on March 7th, pretty much the height of controversy for Clover. I put out a video and I said if you're in Clove or you're thinking about dip buying Clove, take some time to read Why Your Stock is Always Red, an article that talks about how the financial media manipulates stocks in order to screw the little guys in the stock market and distort what a company's real value is worth. Of course, we talked about how that BS was going to start melting away over the upcoming months, and now over a month later, you're starting to see the BS melt away. So shout out to folks who dip bought Clover, starting to see some of the sunshine through the dung. Price target on this one is substantially higher, but we still have about a neck full of dung. We still have ambulance chaser lawyers going after this company that are going to continue to make Clover struggle a bit over the upcoming weeks, but in my opinion, this is the first of many good catalysts for Clover. I think that this is a huge testament to why you shouldn't base your stock market decisions on what you're reading in the headlines, because if you do, you're always going to be late to the game. And again, going back to my point nearly a month ago when Clove was at its lows, take some time to read Why Your Stock is Always Red, and you'll understand why a lot of these companies trade the way they do. Okay, now it's time for the ticker of the hour, Palantir. So they have a huge catalyst coming up on April 14th, and I think it's likely that we're going to see a bombshell. They updated us just 2 days ago about some new things that they're going to be adding to the event, but we're going to be talking about that in a second. First, some context. PLTR, we've been in this grueling mid to low $20 range since early February. And this is despite pretty much across the board consensus amongst our community and a lot of other retail communities that PLTR is very undervalued. Despite Cathie Wood herself buying the dip over and over again with one of the biggest purchases just happening yesterday. And this is despite continued inflow of partnerships like Amazon Web Services, which introduces Palantir's platforms to a casual 1 million users, and major companies like Netflix, Twitch, LinkedIn, Facebreak, BBC, and so forth. But truth be told, Palantir has always been one of the most polarizing stocks. There's always been big funds and analysts who have shied away from endorsing Palantir, despite the fact that their platforms help clients across so many different industries. Palantir works with cybersecurity. They work with energy, with law, with insurance, health and life sciences, auto racing, COVID-19 vaccine rollout and management, defense contractors, mergers and acquisitions. Pretty much you name an industry, Palantir is working with a big customer in it. But the truth is that Palantir has also refused to be a part of Wall Street's big money machine. The CEO, in response to critics and analysts that keep downgrading the stock, basically said, if you don't like Palantir, go buy something else, because we're not focused so much on pleasing you quarter over quarter. We're focused on doing a damn good job. We're focusing on building something, not pleasing the stupid short-sighted analysts. I'm paraphrasing, but I've showed that clip before, and that's basically what he's saying. The CEO said, go buy some other stocks if you don't like Palantir. One of the issues that a lot of companies right now have is they have a choice. They could either prioritize looking good quarter over quarter for Wall Street and delivering that value to them, or they can prioritize actually investing quarter over quarter in themselves and looking better over the years. The problem is that if you invest in yourself as an early stage company, that's going to come at the expense of your quarter over quarter results. So by investing in yourself, you're going to have terrible analyst coverage. But by not investing in yourself, maybe you'll look okay over a quarter, but over the long run, you're not going to survive and you're not going to be able to accomplish your goals. So a lot of growth companies and early stage companies have that sort of dilemma. Do we screw ourselves over the long run in order to raise some capital over the short term and get some good coverage? Or do we screw ourselves over the short term in order to make ourselves look much better and actually be better over the long term? Palantir is on the right side of this. They're investing heavily in themselves. They don't really care. They got tons of money. They don't care if they look bad on Wall Street. They don't care how bad the coverage is. And because Palantir hasn't bent over for Wall Street isn't bending over for them. That being said, you can't blame it all on Wall Street. I think that it's also true that a lot of investors have a hard time understanding the value that a platform like Palantir even offers. And that's why I think this upcoming catalyst on the 14th is going to be such a big deal. On April 14th, Palantir will be launching a massive event called DoubleClick. DoubleClick will show how Palantir software is used by customers across 40 industries worldwide. Palantir software, in a sentence, takes in inputs from a company's operations, analyzes it, runs simulations on it, and then helps the business make better operational decisions. And these platforms have a track record of improving efficiency across cost, time, and space. And on DoubleClick, they'll be able to show how that's true across many different industries. They'll show chained model simulations showing how inputs can be provided to their software and chained together digitally, adapted to events in real time, and then used to run simulations for future events that then can drive decision making. It'll show how customers can use its software to integrate up to many thousands of sensor readings in real time. Any of Palantir's clients are manufacturers, airliners, oil wells, huge supply chains. How do you take all of those data points together from all those operations and then use that to decide how to make things more efficient from the top? Palantir software offers that solution, and they'll be showing that on a massive scale during DoubleClick and showing proof of concept of how that provides better outcomes for companies. And because again, the whole focus of the value behind Pltr is their platform and how effective their platforms are compared to the competitors, this event gives them an extremely powerful opportunity to show the world just how valuable they are. And I think they're going to use this opportunity to drop some even new bombshells, new features that make them even more competitive. So I think we have a very solid chance that this is what wakes up Pltr. And I would definitely not sleep on this play heading into this catalyst. Anyways, folks, that caps off the video. We did Clove as our requested ticker of the day, but we always do a requested ticker of the day, so make sure to comment below if you have a ticker that you'd like us to cover. Sometimes I forget to do the requested ticker of the day, but usually we do it. We always catch up later. Anyways, folks, if you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. If you'd like to learn how to trade, would like access to our daily morning briefings and, of course, our price targets list, I'll go ahead and put the link to ZipTrader U below. If you're wondering what broker to trade these stocks on, well, Webull will give you some free stocks if you sign up and deposit with our link below as well. They are a fantastico broker for new and intermediate to advanced traders alike. There's tons of great scanning tools, great resources for doing your due diligence, and of course, they are commission free. So lots of things to consider if you're looking to join a new broker. Anyways, folks, have a great day and I'll see you in the next video.